I think Bitcoin's 4-year cycles are over because MicroStrategy is going to attract trillions of dollars of capital to buy as much Bitcoin as they possibly can. And in this video, I want to go into this in depth. Let's get started. I want to start with how Bitcoin's price is set in the first place. So the price is set by buyers and sellers who come to an agreement on what the price should be. They make a trade. Let's say the buyer tries to look for a seller, the seller looks for a buyer, and when both come together and they agree on a certain price, a trade is made, and that's the current price of Bitcoin. So right now, the current price of Bitcoin is something like $89,930. When there's an imbalance of, let's say, too many sellers and not enough buyers, the price will go down because the sellers need to bring more buyers into the market. So this is almost like an auction. There are sellers saying that they want to sell Bitcoin, and the buyers are coming to the market saying that they want to buy Bitcoin. If there aren't enough buyers, the sellers have to lower the price in order to bring more buyers into the market. In the past, this setup was completely different. The only people who really bought Bitcoin were the ones who maybe understood it, the ones who wanted to gamble on it, the ones who thought that they could get some short term returns, get rich quick. But I think that this cycle is completely different because MicroStrategy has set up some very powerful products. They've started issuing digital credit, and I'll explain exactly what that means in a bit. But they've created these products that allow them to accumulate much more Bitcoin than, let's say, the retail investors in the past. So in the past, because there weren't that many buyers, the price would have to come down a lot in order to bring more buyers into the market. So in the past, we saw massive increases in price. So you can see here, 2013 price went from $121 all the way to $1,132. And this happened within about a month. Then we saw a massive drawdown. So from $1,120, the price went all the way down to something like $200, $150. You can see that down here. So when the price was running up from, let's say, $100 all the way to $1,000, in that period, buyers had to demand more sellers to come into the market and sell their Bitcoin to those buyers. Then when those buyers ran out and they didn't have enough money and they couldn't borrow enough money to buy more Bitcoin, the price came back down because this massive run up was, I would consider, a fake increase in price. It was just out of hype, out of people feeling greedy, people feeling like they were going to miss out. The term Gartner hype cycle perfectly describes what's happening here. You can see here there's a massive increase, there's a peak, then it comes back down, and then over time there is some growth, and that growth comes from more people entering the market and actually valuing whatever Bitcoin is. More people have these expectations that Bitcoin's price will go much, much higher. So back to this chart, you can see here there are multiple cycles like this. It goes up, comes down, goes up, comes down, goes up, comes down. And you can see clearly that there are higher highs and higher lows. So the low here is lower than this low here, which is lower than this low here. Then you see the higher highs as well. At this point, the peak was $1,130 or so. At this point, the peak was something like $19,000. At this point, the peak was something like $70,000. And a couple of months ago, Bitcoin peaked at around $126,000. A lot of people are predicting that these cycles will continue. You'll see these massive blow off tops, then you'll see a massive drop, massive blow off top, massive drop, massive blow off top, massive drop. But you didn't really see a massive blow off top in this cycle. So the cycle that we're going through right now, the current, I guess, 4-year cycle, you didn't really see that massive blow off top. The red, you see that here, indicates the multiple of Bitcoin's price over the 4-year moving average price. And just to clarify what I mean by that, this is the 4-year moving average price. How the 4-year moving average price works is you have 4 years of data. Let's say you have a new data point. The oldest data point drops off, meaning that the newer data points, at least from this chart, what I can see is that the newer data points are much higher than the oldest data point that dropped off. So over time, the 4-year moving average prices keeps going up. In the short term, you're going to see this crazy volatility where the price can go something like 5 times the 4-year moving average price, but eventually it seems to drop back down to the moving average price. Right now, Bitcoin's price is about 1.6 to 1.7 times the 4-year moving average price. I would consider a blow off top to be something like 4 to 5 times the simple moving average, meaning that Bitcoin's price is way higher than what it should be. The simple moving average is way too low compared to the actual price of Bitcoin. So you can see here in 2022, the 4-year moving average price was something like $23,000 and Bitcoin's price was something like $16,000. So this would have been a massive buying opportunity for anybody who really wanted to get exposure to Bitcoin. But I think that over time, the lower multiples compared to the moving average are going to be normalized. You're going to see 2 times the moving average to be the norm. So let's go back to this order book. Now you know why Bitcoin's price used to fall a lot. It was because there weren't enough buyers to fulfill the supply that was coming in from sellers. So what exactly does Strategy have to do with all of this? Strategy is a Bitcoin treasury company. They are trying to buy as much Bitcoin as they possibly can. In the beginning, they were using cash flows. They were earning the money to buy Bitcoin and they were using their savings after their business expenses to buy more Bitcoin. Over time, they changed their strategy to convertible debt. They only did this for a very short period of time. It was a year to a year and a half. I think earning cash flows is probably the hardest strategy to accumulate Bitcoin because you have to put in time, effort, energy, your own resources to buy that Bitcoin. And you have to create value in the first place before you can buy that Bitcoin. Convertible debt is also pretty hard because you have to convince other people to trust your business strategy and to believe that you'll be able to pay them back at some point in the future. There's also a lot of risk associated with convertible debt for the company because the people who lend you the money have all the rights to your assets and your company could go bankrupt if you don't pay back the convertible debt. Then there's the equity issuance, which is a little easier, I would say, compared to the convertible debt because you're selling more shares to the market and the people who are buying those shares have already bought into your strategy. They believe that your company is going to do something. They believe that your company will continue to grow, but it also hurts the people who own the shares in the first place because their ownership is being diluted. They have to trust you not to issue too many shares of your company. Now, MicroStrategy has changed how they accumulate Bitcoin. They're now issuing preferred stock. I would personally say that this is easiest out of all 4 methods because the shareholders get a huge benefit. So their opinion doesn't really matter. They're buying the shares because they get this benefit. And the benefit of the preferred stock is the shareholders get something like a 10% dividend, depending on which preferred stock of MicroStrategy they buy. I think what Strategy is doing here is a perfect example of a flywheel, and they're using what they've done in the past to compound their growth for the future. A flywheel is a heavy rotating wheel that stores rotational energy, kinetic energy, to smooth out power delivery in machinery, acting like a mechanical battery by absorbing energy during power spikes and releasing it during power lulls, ensuring consistent speed and operation, especially in engines where power strokes are intermittent. So what's happening here is this is a wheel that's very difficult to move in the first place. So in the first place, it's very difficult to start making it rotate. But over time, it becomes easier and easier as you have momentum and you have inertia. If you keep pushing it, the wheel will start turning and it'll start turning on its own. It's almost like if you were to ride a bike at a very high gear. In the beginning, it's very, very hard to get that bike started, but as you gain speed, you have to pedal less and less in order to keep the bike going, and you use less energy to keep moving. This is exactly what Strategy is doing. In the beginning, they had to brute force their way into accumulating Bitcoin. They used their own business's cash flows to buy Bitcoin, then they used other people's money to buy Bitcoin. Then Strategy had to issue its own shares. It had to share the future of its company with more people who may be interested in the exact same pursuit. And now, because they have enough Bitcoin, they've created even more offerings of their preferred stock, which over time will make it easier and easier for them to accumulate Bitcoin because people will come to that preferred stock on their own. And I did a quick calculation of how many common shares Strategy has issued over the years. So 2020, they had 76.23 million shares outstanding. In 2021, they had 93.2 million. 2022, they had 95.8 million. This is the amount of shares that were issued. So in 2025, they have 281,160,000 shares available. Over time, you can also see that they have way more Bitcoin now than they did before. They started off at 0, of course. They went to 70,000 in 2020. 2021, they went to 124,000. 2022, they accumulated another 8,000. 2023, another 56,000, 2024, another 258,000, 2025 so far, they've accumulated 213,000 Bitcoin. So in the case of Strategy, you're seeing that over time, they are accumulating way more Bitcoin because of this flywheel. The flywheel that they've created initially had them buying less Bitcoin, and now they're buying way more because, again, they've put in the effort, they put in the time, the energy to get that flywheel going. And now the flywheel is moving on its own. Of course, they're still putting a lot of effort and time and energy into the flywheel to keep it going. But I think that their current issuances of the preferred stock is going to change everything because they're offering something that the market needs. So now Strategy has 660,000 Bitcoin that they're using to issue digital credit. I made a post about this on X yesterday, and my goal here was to explain how STRC, which is one of their preferred share offerings, is designed to break the 4-year cycle. So the 4-year cycle is, like I said before, Bitcoin's price goes up, it comes down, goes up, it comes down. I think that cycle is broken because of STRC. So to explain this, right now there's a huge gap in capital markets. Everybody wants some kind of savings vehicle that allows them to save for the short term, but it gives them a high yield. If you go to a bank, you'll get like 0.1%, 2%, maximum 3%. If you go to a credit union or something, you get a high yield savings account. But the issue with that is that you don't really get much interest. 3% is not much. So everybody wants a short term savings account with a high yield and low risk, but nobody offered this product until 2025 when MSTR created STRC. So STRC is short-term credit with guaranteed interest payments for almost 2 years. MicroStrategy has a $1.44 billion emergency fund to pay the dividends. The best part is that it currently pays 10.75%, and Strategy can adjust this yield whenever it wants to either bring in more capital or to decrease the amount of capital that they're getting. I don't see a reason for that because Bitcoin's always going to return more than 10.75%. I think it'll return significantly more than 10.75%. And what Strategy is doing is they're using this as their cost of capital to buy Bitcoin. They're using the proceeds of these preferred shares to buy more Bitcoin, and they're giving you a very, very attractive interest rate on the preferred shares that they're selling you. So like I said before, the current financial system gives you maybe 0.1%, 1%, 2%. 0.1% is probably the most common. Right now, Strategy pays you 10.75% with STRC. And the greatest part here is that MSTR has now built this trust in the system. They have so much Bitcoin, they have this huge capital base that they can use to issue as many shares of STRC as they want to, because the demand for low risk, high yield, short-term credit is basically infinite. Everybody who wants to save for the future, everybody who wants to save for, let's say, a house, people who want to save for a car. There are multiple reasons for wanting this. All those people who want to save for something in the short term, for a purchase in the short term, have this massive benefit from STRC of getting a 10.75% yield. And what Strategy did to reduce the risk on STRC is they accumulated a $1.44 billion emergency fund to make sure that they can keep paying the dividend for the next year and 9 months. So the proceeds from STRC go into buying even more Bitcoin so that Strategy can issue even more Bitcoin-backed products. And I think that the demand for this is going to explode over the years because even the S&P 500 barely offers you more than 10.75%. In this case, you're getting 10.75%. And one thing that Strategy has done to attract a lot more capital is they've created a tax benefit on STRC. So the distributions, the dividends that you get are treated as return of capital, which makes them tax deferred. This isn't a permanent exemption, but rather a delay in taxation. And the way that this works is when you receive a dividend from STRC, your cost basis, which is the amount that you paid for the shares, is going to decrease. Let's say you paid $100, you receive a $1 dividend, your cost basis goes to $99. You pay the taxes when you sell your shares. When your shares are sold, the lower cost basis results in a larger capital gain, which is when you pay the taxes. So in a way, this 10.75% yield is actually a lot higher because if you don't have to pay taxes on the yield, then compared to something that you actually do have to pay taxes on the yield on, this is probably the equivalent of, let's say, a 15, 16% yield. So MSTR can create as many shares of this as it wants to. It can essentially offer you a 15, 16% yield to fulfill this demand for low risk, high yield, short-term credit. Like I said before, all those proceeds from STRC go into buying even more Bitcoin and creating even more Bitcoin-backed products. So MicroStrategy is going to be creating this bid under Bitcoin's price that will probably never go away because there's always going to be a need for short-term, high yield, and low risk credit. And then on top of this, I think there's another benefit here. When Bitcoin falls, the people who hold Bitcoin will want to sell their Bitcoin and they'll want to hold cash. And what's the best thing next to cash? Credit. You can lend your money to Strategy. Strategy will give you a 10.75% yield. And then Strategy will turn around and buy your Bitcoin with the proceeds of your STRC purchases. So now let's go back to the order book. This really blew my mind. Once you understand that Strategy is basically creating a permanent bid for Bitcoin, you start to realize why Bitcoin's price is going to be a lot less volatile to the downside compared to before. There's unlimited demand for STRC for digital credit. It fulfills a need that people have for short-term, high-yield, low-risk credit. And like I said before, Strategy has created a emergency fund where they can keep paying the dividend for a year and 9 months. So if somebody wants to save for, let's say, a year, they're guaranteed to receive the dividend that they're entitled to because Strategy has the cash set aside to pay them that dividend, no matter how low Bitcoin's price goes. Anyone in the world can be a customer for this as long as they have a demand for high yield, low risk, short term credit. And you can see here that money market funds are fulfilling that demand. They're worth $7.4 trillion. Money market funds are worth more than Bitcoin's market cap as a whole. So I think that because anybody can be a customer, because the returns are so high, MicroStrategy is going to attract a lot of money, trillions, 30, 40, 50 trillion dollars into these products that they've created. Like I said, they're short term. You can hold on to it for a month, 2 months, 3 months. As long as you get to that dividend date, you get your dividend. And this digital credit that Strategy is issuing can be very, very secure because of that $1.44 billion emergency fund that will be used specifically to pay the dividends on the digital credit that MicroStrategy is issuing. Like I said before, this is going to bring trillions of dollars into Bitcoin because of the security. I've mentioned in previous videos that all you need is Bitcoin and cash. That's exactly what MicroStrategy is doing. They have Bitcoin and they have cash, and now they have this business which is issuing as much digital credit as the world can demand, and they can keep buying more and more Bitcoin. So this bid under Bitcoin is going to last forever. As long as there are people who want to save for the short term and they're willing to buy Strategy's STRC offering, Bitcoin's price will only go up. It can't go down because Strategy has an insatiable appetite for Bitcoin. They will continue to buy more Bitcoin forever because they know that they can issue a lot more credit against that Bitcoin in the short term. They can keep issuing more and more products that will make it so that the flywheel gets even more powerful and they'll buy even more Bitcoin, making the flywheel even more powerful as they go along. And like I said before, this targets money market mutual funds, which are worth $7.4 trillion as of Q2 2025. And this is only in the US. And this can target really any kind of short term savings vehicle. Let's say somebody has money in a high yield savings account, they could buy STRC. Right now, STRC isn't as stable as we'd expect it to be, but I think going forward, it'll be a lot more stable because Strategy accumulated that $1.44 billion treasury of US dollars. So in the past, Bitcoin's price was very volatile because retail investors were the one who controlled the market. They bought based on emotions, they sold based on emotions, and of course, they don't have as much money as, let's say, a company like Strategy can attract with the digital credit that it's issuing. On top of this, now we have the Bitcoin ETFs, which will attract even more capital. We have other Bitcoin treasury companies who are buying even more Bitcoin. Strategy, of course, is buying as much Bitcoin as it possibly can. It already owns over 3% of the supply, and I don't think that they plan to stop anytime soon. Going forward, I don't think we're going to see the same drops in Bitcoin's price because as people sell their Bitcoin and they move money into, let's say, STRC, MicroStrategy will just turn around and buy even more Bitcoin to offset all the sales that already happened. So Strategy created this product, STRC, which has unlimited demand. I think it's going to be their main product going forward. They may create other products as well. Maybe they'll create one in other countries, one in Canada, let's say, one in Europe, one in Australia, one in Asia. I don't know what they'll do, but maybe they'll create more of these products to attract even more capital to turn that capital into Bitcoin. But I think what you're seeing here is a complete evolution. You saw Bitcoin being an immature asset that really didn't have that much demand. Retail investors were the ones buying it. Now it's a mature asset. Institutional investors are buying it. They're trying to get as much as they possibly can, and nobody can stop them from doing so. Strategy's flywheel effect is getting more and more powerful as we go along. Again, nobody can stop it because Strategy is offering a product that the market actually wants. Most people just haven't realized it yet. So I think because of Strategy and because of the ETFs, the 4-year cycles are over. I didn't really talk much about the ETFs in this video, but the ETFs and Strategy have created a permanent bid under Bitcoin's price that'll continue to push it up higher and higher. If you found value in this video, I'd really appreciate it if you leave a thumbs up. The best thing you can do here is ignore the noise, ignore the people telling you that Strategy is going to start selling Bitcoin, ignore all the people who are saying that Strategy is going to collapse. I don't think they're going to. I think they're just becoming more and more powerful every single day. And as Strategy becomes more powerful, so does the bid under Bitcoin, because Strategy attracts trillions of dollars worth of capital and they turn around and buy Bitcoin with all of that capital. The best part here is that Strategy never has to pay back the digital credit that they issued because they can just keep paying the dividends forever.